Hey, everybody. Good to have you back for getting started with stock investing. My name is Mike Fairboard, sitting in for Kevin Horner. Looking forward to our discussion today. Wanted to take a look at income stocks. Some of these income stocks have held up a little bit better given the current volatility in the markets. And I wanted to specifically look at the dividend aristocrats today. We'll break that down for you and show you why income investors will oftentimes look at that group of companies for income. With that, we'd like to welcome you here today. We've got Riceberg and Will. Welcome, guys, as well as Rochelle, Jerry, and others. Kevin, great to have you guys on board. Yeah, any questions, comments you have, throw those into the chat box. Joining the chat with a good friend of mine, Cameron May. So great to have Cam here. Folks, you can follow us both on X. Follow Cameron May at Cameron May CS. Myself, I'm just Mike Fairborn CS. So with that, look forward to getting into it. So let's just do that, starting off with some disclosures. Now, information here is for general information purposes only. The Paper Money software application is for educational purposes only. Investing does involve risk, including the loss of principal. Now, past performance is no guarantee of future results, and there is no guarantee that an execution of a stop will be at or near the stop price. Trailing stops and other conditional orders are held on Schwab's servers and not routed until your order conditions have been met. A quick note, too, we'll be discussing dividend-paying stocks, and companies can cut their dividends really at any time, so be mindful of that. Of course, we're going to be looking at the dividend aristocrats that have had a long history of increasing dividends each year without fail. So we'll talk about those, really tap into the income aspect of investing. In fact, let's do this right now. I'm going to go ahead and just pull up the S&P 500 index. See how we finished off a little bit today? We did have, we were down today about 157. Market's still not closed. I'm sorry, but we're not done for the day. But here we are. You kind of have to look at today's move, 156, relative to what the move was yesterday. It was a massive move. That was the biggest upward move in the market since actually '08 that we saw. So it's a big move, and a lot of times when you get that, it's not too unusual to see a little bit of a pullback. I've noted this area up top as a possible level of resistance, the 5650, which we've been kind of meandering around for quite some time. And of course, some traders might look to see if the price of the stock can get above an RSI. This is the RSI indicator over here. They oftentimes will look to get above 50 for bullish indications, bullish strength. Okay, as we look at that. So just some key things to note in the market. The big mover that we saw, I think, it was interesting to look at the Dow yesterday. The Dow Jones Industrial Average, the index itself, that was up. I think it was a little over 2,500 points yesterday. Yeah, from the low to the high, the range was 3,500 points. I don't know if I've ever seen that before, but that is a big, big bar. Not to say that we hadn't had big bars previously, but that encompassed even the big bars that were there in place. So again, not too unusual to see a pullback right through here. All right. Well, I want to dive right into the core part of our discussion, which is the dividend aristocrats. I wanted to break that down for you. In fact, let's pull up that list now that we have this list available. We have not always had this, but we do have it now. You can get that as a watch list. I'll shrink this over just a little bit. But the watch list you want to pull up here to look at the dividend aristocrats is over here on the left-hand side. Just click on the plus sign, pull up the watch list. I've got it set up already, but what you'd want to do is just go down to the public folder and then go into 25-year plus dividend. I should say 25 plus year dividend. It does not state the dividend aristocrats, but I want to talk about what the dividend aristocrats are as I move back to the S&P 500 because they are all on the S&P 500. Every single one of these companies is in the S&P 500. Okay, the dividend aristocrats. Now, they do tend to have lower betas, meaning that the S&P 500's beta, if I click on it up top here, there we go. And under underlying, I'm going to just click down one more down arrow and look all the way over here with me, folks, to the right. A beta of 1. Oftentimes, many of these companies will have betas. A beta, okay, and that beta is going to be, oh, my drawing tool is a little bit slow today. It's going to be less than 1, Okay. And that means there's just less volatility in the market. And that's why I wanted to look at this today as on the income side, because a lot of investors will oftentimes gear or they'll look towards these companies through challenging times when the markets have been volatile, quite volatile. Um, as we look at these, though, what I wanted to highlight is they have been consistent in increasing dividends. So in good conditions and in bad conditions within the market, all of them have been able to raise their dividends each and every year without failing 25 plus years, at least 25 in a row. If we think about that, we've had some recessions over the last 25. Well, I think we've had a couple, right, over the last 25 years. Many of these companies are well over 25 years. Some are over 50 years. Now, if we're looking at 50 years, we're going to go ahead and throw in another 2 or 3 more recessions. The companies have still been able to raise their dividends, and that's a really interesting indication. So they're all in the S&P 500. They've all raised their dividends each and every year for the last 25 years. And, well, they to be able to raise those dividends, you can imagine that they've had to be able to increase their earnings too. And what does that mean? So when we look at earnings, I'm going to clear this off. I like to do this sometimes just to get a blank screen to look at this. If we look at a company's earnings, so we're looking at a company that is, first of all, able to take their dividends, got to draw kind of slow again, their dividends and raise those dividends for 25 years, each and every year plus, okay? To do that, we look at a company's income statement. We have sales. Sales, we subtract from sales expenses. Don't know why that's going slow, but I have to kind of draw slower. There we go. Sales, I'll just write the whole thing out. Sales minus expenses, and that's going to equal earnings down here. Now, we are talking about publicly traded companies, so I'm going to put earnings per share. We really want to just dissect this for a little bit. Earnings per share that the company's got. Now, there is oftentimes a direct correlation between earnings per share and a company's dividends. DIV for short. When a company can increase its earnings, oftentimes that means that they can also, so when dividends increase, I'll put this out, earnings increase, dividends too can be increased. They can raise those dividends because dividends are not paid out as IOUs, right? They have to pay those out as cash from the company, right from the balance sheet, right? And so that's an interesting aspect. When earnings are going higher, they're able to raise the dividends. So the fact that we are looking at a group of companies that have been able to raise their dividends for 25 plus years, what does that tell us about their earnings per share in order to raise those dividends? Well, the earnings per share, it's safe to say that they haven't been losing money for 25 years. They've probably been very, very likely overall been able to increase or at least keep incredibly stable the earnings per share. The difference is they've been able to raise the dividends. And if you're doing that, you kind of need to be able to raise your cash too, or your earnings per share to derive that cash. And so this gives us an additional sign, doesn't it, that these companies they tend to have stability over an extended period of time in terms of earnings. Now, one other thing to look at too, if we're just looking up top here at dividends, what if we just said companies that made it to this list? Well, if they've been increasing their dividends, which they have been, it also tells us that they've also been potentially raising their earnings. And that's how we're going to look at it today. That's kind of just the last point I wanted to make here. Behind the scenes, we just know that they've raised the dividends, so that likely means that they've been able to increase their earnings over extended periods of time as well. Okay, and it's that kind of consistency and stability that can be helpful in the market. Remember, there were tariffs back in the times of Ronald Reagan, President Trump's first term. There were tariffs, which, by the way, did not have a negative impact on inflation. In fact, it dropped it over time, slowly. It dropped slowly. Through most of it, of course, the coronavirus throws everything out of whack. But yeah, so that's just kind of the basket of companies we're looking at right now. So I wanted to highlight these and show you them and show you where they're at first and foremost, so you can see where they're at. Now, of course, we also want to take a deeper dive next into those companies, and we want to talk about, what are they doing in terms of being able to continue to raise those dividends? What looks good in terms of the business itself? One of those key aspects within the business is actually the company's cash flow. So on a real basic way, we know that dividends are paid with cash. So what we can do is we can pull up Schwab.com, and I'm just going to go into it right now, and I'm going to show this to you. Just pull it on up. Got the demo account set up here in place, and I'm going to do this. I'm going to pull up and show you over here ABT, which I think was the first one on our list. I believe it was the first one. Let's just double check that right over here. It was Abbott Labs. Okay, just in alphabetical order. I think there's about 68, if I'm not mistaken, a few of these. You're going to recognize a lot of these names in here too. Coca-Cola, Clorox, Procter & Gamble, Caterpillar, companies like this. Okay, so with this, though, let's go over here. Oh, let's go back to that. And where was I? I need to pull that up, right? Oh, there we go. Okay, excellent. So where I'm at right now, just on Schwab.com, I've gone into research up top. I'm just going to simply type in the symbol ABT up top here, hit enter, because I want to see and get additional verification or indications that perhaps Abbott is going to be able to continue to pay that dividend going forward. You can look over here to the right-hand side and you're going to see additional information. But if I scroll down a ways, it's going to get us into earnings. And where I'm headed is actually statements right down here. This is just a great way to see if a company's cash flow is stable over a period of time or not. All you need to simply do, click on cash flow, because dividends are paid with cash. Now, the cash that we're looking at is going to be this cash right there. Total cash from operations. There are a couple of different ways to look at cash. They have cash from investing. They have cash from financing. Almost everybody that looks at perhaps Abbott Labs is not really too focused in on how Abbott Labs is investing their cash, their excess cash, or their financing. They're involved, in the company because of what Abbott Labs does. That is, it's a pharmaceutical company, right? How's that process going? All right, so having said that, let's take a look over here at the annual trend. Now, a quick note, this does run a little bit counter to the Thinkorswim platform in terms of the Analyze tab there under Fundamentals, which I'll take a look at too. But I want to show you over here, it does run, okay, so this is this is 5 years ago, right, basically? We got 5 years, inclusive. 2020 to 2024. So you have to look at the growth from the left side, reading from the right to the left. And what we're looking for here, for the possibility of a continuation of being able to pay that dividend, we're looking for growth, even though I'm going to draw this from the left to the right, growth or stability over a period of time. What we don't want to see is years of this, because that's how dividends get cut. For example, General Electric, for the longest time, was a dividend aristocrat. It got cut. Now, the stock, I think, has performed well as of, the last couple of years or so, but it got cut. But you had a good warning sign that from cash from operations, or CFO, cash from operations, that they may cut the dividend. In fact, you just had a trend of lower lows and lower highs. They gave you a little bit of a trend here, but again, you've got to read that trend a little bit differently. But as long as it's stable going this way or up, which it kind of is, that's a positive. So that's a good quick way to look at this, because if I come in over here and I click on Show More, what I'm going to be able to see here is I got to go to the cash flow statement again, and let's go annual cash flow statement. Here is a summary view is just fine. But what we could do is we can look down here and we can actually see it's under financing, total cash from dividends paid. How much dividends are they paying out relative to the money that they're bringing in? It's such an easy way to do it right there. You'll notice, is it going higher? It will be going higher because it's a dividend aristocrat. But what we're looking at is really kind of the pace of it. Is that pace okay relative to what the company's bringing in terms of cash? Because cash, total cash from operations is cash that is available to them to to spend on the dividend. And so it's just kind of cool to be able to see this. This is what ultimately can really, has historically helped keep these dividend aristocrats up, is the relationship between cash from operations and total dividends paid. Okay. Now, so you have something to look at. Now, we don't just necessarily have to use this on the dividend aristocrats only. We could use this on other dividend paying stocks as well. Let me show you this over here on the Thinkorswim platform. Analyze tab and then fundamentals right here. We can scoot in. Let's take a look at Abbott. There it is right there. Again, you get some information up top you can look at. But if you come down here, you can look at some details. Like, for example, they do have the cash flow per share on a cash flow per share basis. The difference here is, and this is really cool to see too, and this is normally how we're used to looking at it, but what is cash flow per share doing on a per share basis? There's your 5-year trend right there. Notice it's up. Wow, 2024 was actually a pretty big year, and the stock did move. Okay. So I want to show you that. You got free cash flow. That too is also basically staying strong. It basically flat to sideways as well. But we have this information here, and this is really, really tied into the performance of these companies. So having said that, let's take a look at a few of these stocks. And what we're going to do is I'm going to do actually a quick little scan in here for you. So simple and basic, but we're going to see what companies are maybe still holding above. Let's say, for example, their 200 or their 50-day moving average. So now we can look at the trends across all of these companies. We can come over here too and just click on these stocks, and we can look at them very fast, which is great, as long as they're linked, which I think many of you know how to do. You just click over here, link these up into red and red, and you can go through and take a look. Some have not been doing so well. Say, for example, Archer Daniels Midland. One of the tariffs that China is putting on us, one of only just a few that they can do is, well, they don't have too many, right? They purchase less goods than Ireland, for example. Ireland's significantly smaller than China, but yet Ireland purchases more goods. But one of the goods they do purchase are like, say, for example, soybeans, just to get really specific, or wheat. And if there are going to be tariffs on those, well, it could impact a company like this. So this is one that does stand out of all of them. I don't think there's any others that are in this field except for Archer Daniels Midland. So that's kind of a tight spot to be in, but there you go. All right, we've got this, but there are some ways to just look and see what those trends have been doing. So since we've identified this group and we have it now as a public list that we can tap into right off the Thinkorswim platform, and let's just say we've gone through and we've looked at other categories too, we can put up here, say other information we can tap into. So, for example, other comparisons, like on the value side, the PE ratio. Let's look at the charts though first, as we've just looked at ways to kind of compare the dividend. So the first thing I want to do is actually just do a really small scan. Very, very easy. I'll show you up top. I'm going to click on the scan tab. Such a great way to find information here too. The scan tab, Stock Hacker, and then to the right of it, what I'm going to do is go right into, not the S&P 500. That might be an interesting search. The last search I did was on the S&P 500, and specifically information technology stocks, that sector within the 500. But here, what we want to do is just scoot on down to the public folder. Right there's the top one, and it's the 25+ year dividends. Those are the aristocrats. I'm going to clear this part out. This is information technology, so let's get that out. And what I want to do next is go over here and we can put in any additional information. I'll show you that in a second. Say, for example, as I'd mentioned, the PE ratio right there. You got that. Price to earnings ratio, we've got our beta. Those are the two key ones I really wanted to bring up today. I've got the columns in place as well. So we'll look at those. I've got that ready to go. All I simply want to do, I can pull these up right there, and then it's just going to pull up every one of them. And a good quick way to look at the price to earnings ratio, the beta, right? It's all right there. Got that information. Which companies have the lowest beta out there? It's going to be, well, there you go. AbbVie, which was a spinoff of actually Abbott Labs. And you've got Abbott Labs as well. Very, very low betas. That's the lowest. Sorry. That wasn't the low. I had to click it one more time. We're down at 0.3. So substantially lighter moves, right? Or let's say, for example, every 1% increase in the S&P 500, increase or decrease, these companies would only move about 0.3. But when volatility gets high, they tend to attract more attention. Here's one you're familiar with, Colgate-Palmolive, Kimberly-Clark. You've got Johnson & Johnson in here as well. Okay, so we've got this portion set up. Let's do the technical aspects so we can see how that is setting up as well. So using more of these thinkorswim tools to really get us the information quickly, what I'm going to do is go right over here. I'm going to actually circle it so you can see it. Add filter. So again, we're in the scan tab, main tab, sub tab, stock hacker. We've set up our dividend aristocrat list, which is everything here. We've got a couple of columns that might be of interest to us. Okay, and then we've got the add filter. Let's clear that off, and I'll go right into the add filter right now. What we're going to want to do is scoot on down to study. Okay, now I've got a study that I put in here as it's popped up, and within that study, I'm going to jump in over here and click on this little pencil to the right of the periodicity right there, just to the right of it. Right, and you can see it has a default in there of the ADX crossover. I'm not looking at that right now. In fact, what I want to do is I want to take that off, just delete it. And I'm going to say I'm in this condition wizard. I'm going to add my own condition. This is referred to as the condition wizard. It's just going to scan the group of stocks that we've selected here for exactly the criteria that we select, that we want to screen through. First up, what I'm going to do is click on price, closing price, and all I want to say is that we are greater than, that's the action item there, price of the stock. It looks at the current price right now, where it's closing like at this very moment, is greater than a study. And that study is going to be the simple moving average of a period of time. And that period of time is going to be, let's say, for example, initially 200. It's so easy to change when we do this, but how many companies are above their 200-day moving average right now? We'll narrow this down because right now you can see we've got 65 companies, as we could see over here. I'll just scoot this over and show you. Right now, there are 65, right? 65 companies in total, but how many of them are above their 200-day moving average? I'm going to show you this and fast. Click OK. All we need to do now is just click on scan. 17 is all. So what has been performing out there? Here are your sub-industries to break these companies down for you. Utilities, personal care products. Think about staples out there. The staples, in fact, a bigger category just to throw in here, and I'll do that right now for you, is going to be sectors. It's even easier to spot. Put it up first. So we got the description of the company. We got the name, description. It slipped right in there. And there you go. We'll make it a little bit wider here. Super fast, but it's just great, because how hard would it have been for us to look back and find companies that have been raising dividends for 25 years consecutively? Very difficult, right? That's challenging to do. First of all, we don't even have that. I don't think we have about 10 years, I think, of uh, well, on the charts, dividend increases or dividend data. But so it'll be even more difficult. But to pull that up, then to find the sector that it's in, so you can quickly see that, the sub industry, how is it doing on its PE ratio, its ratios? Okay. Where do these seem a little bit high, and where might they seem a little bit more in line to what we might be looking at? Kimberly-Clark's around 22. A lot of traders. Okay. I'm going to look at these charts here in just a second, but I wanted to pull them up to show you, hey, we're above the 200-day moving average, right? So maybe the trend's in there longer term. We can change that moving average so quick too. But let's just pick on one right here. Let's look at the chart, and I'll show you one other thing. Let's do Kimberly-Clark. Let's do, yeah, Kimberly-Clark, first of all. KMB. Coke's in there too. By the way, what was Coke at? Coke was at 27. Okay. KMB. There it is. Here is a weekly view of that chart. Wow, it's been kind of sideways. I did notice that, yeah, there were some questions in there about stocks that might have a tendency to trade sideways. I mean, that's why, where it could be helpful to look at these longer term perspectives. I think it's an interesting point you bring up. Are they holding into a sideways range, and how might I trade that? What sort of approaches am I going to use to trade that? Because there has been that tendency, right? Especially over, I mean, these are years down here that we're looking at, and you can really see that it tends to, once it gets toward kind of sort of towards the bottom end of the range, it maybe tends to bounce back up or vice versa. So that's really helpful. We do know it's above the 200-day moving average, so it hasn't been trending down. Now, we don't necessarily need to have the 200-day moving average in there, but I just want to show you that you could have a 200, a 50, whatever it is, to try to help you find the technical side of these trends too, of these stocks, excuse me. The technical trends of these stocks can be very, very useful, a very useful tool, okay? Now, one of the things that I wanted to kind of finish up on too, we got some time, but I wanted to bring this up, is where does, as you saw here, this stock trading sideways over a long period of time, where is it and why is it more interesting that the stock at a lower level? Now we know because of price, it could just be cheaper. It's more affordable, obviously, at that point in time. But what about the dividend yield itself? How does the dividend yield look on some of these companies right now relative to where it's been in the past? We have a tool here to help us with that, a ThinkScript, that I want to highlight, show you right now. I'm just going to go into it. Historical yield. And I've got an updated one that I want to share with everybody, because I do teach a class, actually tomorrow, I teach a class on ThinkScript, and this is one that I had built. It's in here, and what it enables you to do is it enables you to change where the overbought, oversold levels. Boy, that didn't get spelled right. Bought? No. I'm going to change this before I'll update it, and I can actually update it and put it out there, but it does say overbought. That's funny how I spelled that. And a moving average as well. I'm going to I put a moving average on that indicator, but let's just go ahead and show it to you right now, and I'll point out to you what this looks like. So this is on a weekly chart. It's going to work weekly. It's going to work daily, but this is where the yield has been incredibly high up top here. Excuse me. Yeah, incredibly low. I'm sorry. High. My bad. High. The yield is high. The price is low right there. So when the prices get low, and you'll notice that, and this is just a different way to look at income stocks, but notice when they take out that top line, they get close to it, that tends to be an area where the stock might be bottoming. Let's hit it again, right here, over here clearly, all through here. Notice there was some consolidation in price. And again right there, look at that again right there. So look at this. Stocks, remember, these dividend aristocrats, dividend buyers, income investors, generally speaking, will often look for companies that are trading towards the upper end of their historical dividend range. Now, a lot of times they'll subscribe to different magazines and publications to help them find that, but you've got the tools right here at your fingertips to tap into that. And that's really, really, I mean, it's such a great tool because how many people have a history of where the dividend yield has been at over a period of time? But income investors that subscribe to a lot of these are just in general, I mean, a lot of information can come out. You know, a lot of it gets talked about a lot when they're at a high range as well. So this tool can really help you sort of spot some of these levels as well. So let me go ahead and just share this with everybody into the chat right now. And then what I'll do is, yes, I will, John. I will send it out to you specifically. Well, I'll have it in the description section of this class as well. I'll highlight it too. This is one that I did build in that ThinkScript class. I'll give you a heads up on where that's at. We talk about them a lot in my ThinkScript class too, but let's just do this right now. So I'll go into it and I will share it. Oh, let's hit it here. I'm going to change that over bot. Everything else. The one thing I want to state too on these these ThinkScripts is they're not guaranteed for timeliness or accuracy, but as long as the data that's coming into the platform is correct, well, it's working. It'll show you the data here, but I just had to state that, okay? So let me get this shared. I was going to check one thing. Yeah, let me just change that before I share it. How about that? I don't know why I put that in there, but I did. Okay. I'm just changing the script itself. Mhm. Hang on a sec, folks. I just assumed get that corrected, but hang on a second. I'm just going to look at my other screen. Just one moment. Okay. Oh, there was one more at the bottom. I wouldn't have had to do this, but what's going on is, okay, there it is. Now, when you look at it, it should say overbought, oversold. These are the lines, okay, that I've represented here. I found that interestingly, the 20% up and if it's 20% near its upper range, which is what this level was right here, that can be interesting. You can change it though. I've also put a moving average on here. Sometimes when the dividend yield begins to break up below that level, actually when it goes below the moving average line, that's sometimes where prices do accelerate, like right over here. Right over here, you see how it's breaking above that level. When it's breaking below, sometimes you get a price acceleration. So let me just go ahead and click on this, and I will share that with you right now. Okay, so that is into the chat box. You can do that, by the way. I'm sorry, that's not it. Let me remove that real quick. I apologize. It should have shared it. Huh, so strange. Oh, I hit one more. I'm sorry about that. There we go. Now it saved it in my memory, or in its memory, but there you go. So what you want to do is copy this and paste it into the setup item up top. And then what would happen is yeah, you can just go in. Once you have that, okay, once you save it, you can save the name or whatever you want. What you can do at that point in time is just go into your indicators over here, go into historical data, and you can find that I've just labeled it updated historical yield. So that can be quite effective for you as well, folks. Found today's session helpful? Definitely smash that like button. Let me just quickly show you over here too. We've got, encourage you to take a look at, if you do like ThinkScript, if you find that script helpful, you can definitely tap into the ThinkScript class. I have a number of those classes that I've actually gone through, and I've got different scripts out there for different classes of stocks. I know this is a getting started with stock investing. Today we hit income as opposed to growth or value, but I've got plenty of those other two listed over here. I'll pull it up right now. And there's a look at Cameron up top. All right, let's do this. So if you go into playlists right here, you can scroll on down and go right into ThinkScript, which is right here. I'll just post it over here for you if you're interested. But this is just the link of the playlist. These are some of those classes I taught, but this is one too. This is the condition wizard where we went through a few of them in detail, like we built today. But yeah, this most recent one was actually on candlestick patterns. So check that out if you're interested. All right, everybody. I'll put that into the chat right now. Again, ThinkScripts are not guaranteed for timeliness or accuracy, but there you go. All right, on that note, folks, have a great rest of the day. Smash that like button, hit the subscribe. Great to have you on board. I don't think we had a survey today, but there is a survey today. I'm sorry, there is a survey. It's right there in front of me. Please hit that survey link. If you have any, I'd love to have you, any feedback you've got, if there's something you found valuable or useful for the class, whatever it is, throw that in there. Would really appreciate it. I read each one of those, and so too does my manager. Thanks so much, everybody, for being here. I've got to jump on because I'm jumping in right into the next class as well. So I'll see you then for anybody that wants to take a look at after the close. Thanks so much. See you next time.